Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this particular video, we are going to be looking at the range breakout indicator. All right, the range breakout indicator is a custom indicator, so you will need to download it and you will need to add it to your indicators library for your MetaTrader platform before you will be able to use the indicator. Okay, so I'm just going to be adding the indicator to the chart right away. It is the range breakout indicator. All right, I'm just going to be adding it to the chart right away, and here we go. All right, so this is an indicator that works with current price. You can see it works with current price, so we can't exactly look for historical examples because the indicator only displays in real time. All right, so basically what this indicator does is that it helps you to identify the optimal zones where price breaks out of a range. All right, so it kind of offers possible signals for entry points. It doesn't exactly give you a clear buy or sell signal, but it offers you possible signals in the sense that it shows you where breakouts could occur, and if the price should climb above this breakout level, then you could enter a buy. If the price should drop below this breakout level, then you could enter a sell. Okay, so basically that is how the indicator gives its own signals. All right, so let me just come to the higher time frame so that we can have a clearer view of the indicator. Now, if you are a breakout trader, then you might find this indicator useful. You might find this indicator as a good addition to your trading toolkit. And even if you are not a breakout trader, if you are a trader that likes to trade consolidation patterns, right? If you're a trader that likes to trade consolidation, you might also find this indicator useful, in as much as this indicator was designed for breakouts, but because the indicator identifies resistance and support zones that are key for tangible breakouts, right? You know that there are some support and resistance zones that might not exactly lead to tangible moves, right? But the indicator tries to identify key levels, okay? So if you are a trader that likes to trade within consolidation patterns, then you might find this indicator also useful, because when the indicator identifies the pattern, uh, you can decide to trade the range. That is, if there's going to be an extended range, because in some cases there might be an extended consolidation. Okay, depending on the time frame, though, but there might be an extended consolidation. Okay, there might be an extended consolidation. So if in the case whereby we have an extended consolidation, maybe the price continues to consolidate for weeks or even for months, then you can be trading within that consolidation. You buy at the support zone. The indicator already identifies the support and resistance for you. You buy at the support zone. You set your stop loss below for swing low after you have gotten a confirmation. All right, for example, in this case, we can see that we had a morning star, right? So we could have entered perhaps a buy somewhere around here, set stop loss below here, and our take profit level is going to be at the resistance. Okay, then in the case of a sell, when you get a confirmation, you sell and then set your stop loss above the resistance, and your take profit can be at the support. All right, you can also use other indicators for confirmation. Okay, basically you can decide to add perhaps indicators like the RSI or stochastic oscillators, just to get additional confirmation, right? So for example, if you decide to trade the consolidations, you can see that you can get confirmation signals from the stochastic. For example, at this point, you can see that when the price was bouncing off the resistance zone, the stochastic oscillator was giving us a sell signal. So that would have been a great place to enter a sell, set stop loss above the resistance, and then the take profit can be at the support zone. And for a buy, we can see that the stochastic also gave us a buy confirmation here, and we would have considered entering a buy trade, set stop loss below the low, the swing low, and then a take profit can be at the resistance zone. All right, but if you want to trade the breakout, then you have to wait for a breakout to happen. Okay, you have to wait. Yeah, trading is a game of patience, right? So you have to wait for a breakout to happen in either direction, and then when the breakout happens, please and please wait for a retest. Okay, it's important to wait for a retest each time you have a breakout. Now, the retest might not always get to the breakout point. For example, if we have a breakout in the downward direction, we might not always see a retest that will get back to here. Sometimes the retest could just get to this point. It might not exactly touch the breakout point, and then you'll see the price continue downwards. So, but just make sure that you have a retest, okay? Even if it doesn't get exactly to the breakout point, but then get the confirmation, right? Look for a bearish, for example, in the case of a bearish breakout, right? You look for a bearish confirmation pattern, right? A bearish candlestick pattern after the retest. Okay, just try and look for a bearish candlestick pattern before you now enter a sell. And then in the case of a buy, if you have a bullish breakout, all right, after a retest, you look for a bullish candlestick pattern. Okay, you look for a bullish candlestick pattern after the retest before you enter a buy. All right, the essence of that is in case if it is a false breakout, okay, because there are situations whereby it could be a false breakout. So it is important that you get a confirmation after the retest, get a confirmation that the bullish move is going to continue if it's a bullish breakout, or get a confirmation that the bearish move is going to continue if it was a bearish breakout. So it's very, very important. All right. And then when you are using this strategy, whether you are trading the consolidations or trading the breakouts, make sure you always use good risk to reward ratios. All right. It's very, very important. All right. Do not trade with an amount you can't afford to lose. And also, do not risk more than 2% of your capital in one trade, and make good use of risk to reward ratios. Make use of good risk to reward ratios. For example, if you're risking $1, your potential profit should be at least $2. That's going to be 1 to 2 risk to reward ratio. Okay, it's very, very important. So even if you have equal number of wins and losses, you're still going to be on the winning side. All right, so that is the reason why it's very, very important. Okay, risk management is paramount when it comes to trading. Okay, now you can also decide to add another indicator for those who like using moving averages. Okay, you can actually decide to also use moving average for your confirmation. Actually, you can use any other indicator of your choice. It's not necessary, it must not necessarily be a momentum oscillator. All right, it must not necessarily be a momentum indicator. You can use any other indicator of your choice for confirmations. But the main thing is, please always get confirmations. That is the main thing, actually. Always get confirmations. Okay, so that is it for this video. I hope you found this breakdown insightful. If you have got any prior experience using the range breakout indicator, please kindly share your experience in the comment section. And if you have any questions, just drop your questions in the comment section, and I will try to respond to them. In the meantime, thank you for watching. If you have not subscribed to this channel yet, kindly do that now, as it helps to build the channel. And if you enjoyed this content, click the notification bell so that you do not miss out on more content like this. All right. Thank you for watching and happy trading. I hope to see you in the next video.